Thank you for joining us at xm.com for today's market comment by Marios Hadjikyriacos. I'm Maria Pashurudis. Global markets went on a roller coaster ride on Thursday after the U.S. inflation report, but ultimately ended exactly where they started. Inflation as measured by the Consumer Price Index came in hotter than expected in December, clocking in at 3.4% on an annual basis, above the consensus estimate of 3.2%. The core rate was also a touch higher than economists had expected. The initial market reaction was hawkish. The dollar spiked higher while equities and gold prices fell as traders trimmed some bets on rapid-fire Fed rate cuts this year. However, these reactions soon faded, with all of these instruments reversing course to close the session almost unchanged. Hence, a lot of volatility, but with nothing to show for it in the end. In fact, the implied probability of a Fed rate cut in March rose slightly once the CPI dust settled. Sifting through the details of this report, investors seem to have concluded that the CPI print was not shocking enough to alter the trajectory of interest rates, as much of the overshoot reflected rising shelter costs that are considered a lagging component of inflation. In the geopolitical arena, the United States and Britain launched airstrikes against Iranian-backed Houthi militants in Yemen yesterday, in retaliation to attacks on commercial ships in the Red Sea in recent weeks. With tensions in the Middle East already sky-high, this military strike fanned fears about a broader escalation in the region, which translated into a boost for oil and gold prices. That said, this conflict has had little direct impact on oil production so far, so it's questionable whether such concerns will support prices for long without further escalation that actually takes some crude barrels offline. Gold came under selling pressure yesterday following the hot CPI readings, but found fresh buy orders at its 50-day moving average and rebounded with force as the airstrikes against Yemen fueled demand for safe haven instruments and pushed bond yields lower. On the economic data front, the UK economy grew slightly more than expected in November, while in China the economy remained trapped in deflation. As for today, the limelight will fall on the latest edition of U.S. producer prices. Thanks for watching today's market comment here at xm.com.